Welcome to our annual home buying seminar. I'm Laura Pratt, Marketing Manager. We're glad you're here today. Offering financial education opportunities is one of our missions, with the ultimate goal of helping you. My oldest son is now looking for his first home in Pennsylvania. He's finding there are more buyers than there are homes for sale. I know low home inventory is something that you're seeing across the country right now. So the more prepared that you are when you do find a home, the better off you'll be. For attending today, you'll receive $100 off your loan closing costs. Our originators will have the list of those attending today, so there's no coupon or anything you will need to show them, and this offer will be good through the end of the year. All attendees have been placed on mute in listen-only mode. This will allow us to get through the material today. We realize you're joining us for your lunch hour, so we'll do our best to stay within the time frame. If you need to jump off, we certainly understand. We'll be sending out a recording in several days. If you have questions throughout the presentation, please submit them through the Q&A box. We'll do our best to answer them as they are asked. If we are unable to get to your question, we'll follow up with an email. I will now turn it over to mortgage originator Shelby Wagner for introductions. Shelby.
Hello and good afternoon, everyone. My name is Shelby Wagner, and as Laura stated, I am a mortgage originator here at OUCU. Being a mortgage originator means that I will be your point of contact throughout your application and process. I will be actually loading your application and answering any specific questions you have regarding your mortgage application and process.
My name is Kristen Riley. I am also one of the mortgage originators. As Shelby explained, we are your point of contact. We are kind of your partner in crime throughout that loan process. A lot of people refer to us as their mortgage loan officer, and that's a good way to think of us. But essentially, we're here to help you navigate the actual loan process when it comes to buying a home.
Good afternoon. My name is Laura Humphreys, and I'm the Mortgage Operations Manager. I review all mortgage files up front. I perform the credit checks, review secondary market eligibility, and ensure that the loan is compliant. So thank you very much, everyone, for joining us today. And I would like to hand it back to Shelby so we can get started.
Okay. We will go ahead and get started today. So we are going to cover a lot of the basics regarding the mortgage process. So we are going to go over the process itself, all of your loan qualifications, so what you need in order to get the loan with OUCU. We're going to cover private mortgage insurance that you can, in fact, buy with less than 20% down. We're also going to cover what closing costs are and why you need them. And we're also going to cover the loan types that OUCU offers and that are available to you and what options are going to be best for you and your situation. Okay, so we are going to, again, start out with the mortgage process. There are several different steps to the process itself, and Chris and I will be here every step of the way to help you navigate each one of these steps. So to kind of give a quick overview, we're going to start with an application, then comes the contract. Once you're under contract, appraisal, title search, and inspections happen. Then homeowner's insurance is finalized, and then finally you'll get to the closing table. So we are going to break down each one of these steps and kind of go over a little bit more detail. So first is you're going to go through a pre-qualification with Kristen and I. We're going to help you determine your path and see what your needs are, and we are also going to go over what our certain requirements are. We'll discuss a variety of topics, such as what your comfortable monthly payment is, the loan amount that you're looking for, and then Chris and I will suggest options and run some numbers for you based on the information we've provided. Keep in mind that this is not a pre-approval. This is all going to be hypothetical based on the information that you have provided to us. If you do wish to proceed with a pre-approval, we will want you to apply. And by submitting that application, you can do this in a variety of ways. You can submit your application online or by phone, and these two options are encouraged. In-person appointments and application are certainly available if you would like. During the application, we will collect your personal information, your employment information, as well as your income and your credit details. We'll also ask for all of these supporting documents to support all this information that you're providing to us. So we will ask for your pay stubs, we'll ask for W-2s, we will also ask for asset statements. This can include savings accounts, checking accounts, any investment accounts that we will be using for the transaction. Having all of these supporting documents at the time of appointment or of application makes the process a little smoother. Because we will be asking for all of the supporting documents. We do also have a variety of ways to submit these documents. So if you're not seeing us in person, you can submit these documents through your application portal. There's a secure way to upload these documents. You can also securely email all of your supporting documents into us. Or you always have the option to drop off copies at any branch, and these will get to us. We will also ask you to review and sign some disclosures. These disclosures are not going to obligate you to these specific terms, but they are required for your file. We can update anything about the application as we go through the process, so just keep all of that in mind. Once you drop off or submit your application and your supporting documents, Chris and I will review all of this. We'll update your application and send everything to underwriting for a credit approval. Having this pre-approval helps with home shopping because most realtors prefer you actually have the pre-approval in hand before showing any properties. This pre-approval is going to be good for 90 days, and this is with the understanding that no changes are going to be made to your credit within those 90 days. So no new credit can be obtained while this pre-approval is in process. So if there are any changes, that is going to potentially affect your approval status, so just keep all of that in mind. And we will send out friendly reminders of this once you actually submit your application. So once you are pre-approved, again, this is all going to be based on your income, your credit, and your down payment availability. We will provide your pre-approval letter once we can verify all of this and you do meet all of our standard underwriting requirements. So once you're pre-approved and you're home shopping, you find the perfect home and you make an offer. Once the offer is accepted, you're going to be under contract. So this is going to give us, as your mortgage originators, it's going to give us all of the details of the transaction. So it's going to have all the finalized details of the negotiations. It's very important that you provide this contract to your mortgage originator as soon as possible. This is going to help us help you make any deadlines set forth in this contract. So sometimes there is a deadline for appraisal orders. We're also going to be working towards a contract closing date that will be required in the contract. So once you are under contract, the gates kind of open up and we will be starting lots of different processes behind the scenes. Us as your mortgage originators, we are going to be coordinating all of this. So we are going to just let you know, hey, these are the next steps. This is what we need from you. And this is kind of the order in which it comes. We are going to have an appraisal ordered, and this is going to reflect the market value of the home. So we want to just make sure that the home is worth what you're actually paying for it. This is going to be based on a review of the inside and outside condition of the home. We will request the appraisal through a third-party appraisal vendor. This is very important because neither the borrower nor the lender will get to choose who conducts the appraisal, because the appraisal needs to be based on an unbiased assessment of the property. Your current market conditions, so where your value actually comes from, is going to be based on a sale of similar properties, which are also referred to as comparables. So once the appraisal is completed by that appraiser, it's completed and sent back to our underwriters. It is reviewed and they make sure that it is complete and contains all of the information that we need for processing. This is only shared to you as the borrower. We do not share it with any other party. Current timeline on appraisals is 2 to 3 weeks in Athens County. However, in larger cities and outlying counties, the timeline could be a little bit longer. This is due to the high market demand that we are currently in the real estate world. While your appraisal is on order, typically we order your title search at the same time. For the title search, this is going to protect the credit union and you. So the title company is going to be looking for any mortgages that have not been properly released. They're also going to be looking for any mechanics liens, outstanding property taxes, or any civil judgments. This is all going to relate to whether or not the seller has the legal right to sell the property. And all of this is very important because we want you to have a free and unencumbered title whenever you inherit this property. Inspections, these are also going to be specified by your contract. Commonly elected inspections are typically termite, gas line, and septic. You're not required to have these, but these are the commonly used ones in the Athens area. These individual inspections are not the same as a whole home inspection, though. So the credit union does not require a whole home inspection, but it is recommended. And if there are any other specified inspections, they are going to be shown in your contract. The next step, kind of once we get through all of that, is going to be nailing down who your homeowner's insurance is going to be through. We will remind you to be shopping around for different quotes for homeowners insurance once you're under contract. Many companies offer online consultation and electronic signatures for convenience. Just a few requirements on this homeowner's insurance. Your dwelling coverage is required for at least your loan amount. All borrowers are required to be listed on the property, or on the policy. Effective on the day of closing, so your homeowner's insurance is required to be effective on the day of closing, and OUCU requires 1 year of your policy to be paid prior to closing or at closing with your closing cost. The very last step, once we have completed all of these items and we have the green light, you're going to attend closing in person at the title agent's office. This is when your down payment and closing costs are due. And we will also give you some wire instructions and further instruction once we have that piece of it. So now that we understand a little bit more about the mortgage process, let's look at what is needed to actually get one. So what your requirements are and what our qualifications are. So first is going to be credit. Your credit score is a 3-digit number used to predict risk of serious default. It is used to predict how likely a borrower is to repay their loan. The FICO scoring model is the most widely used scoring model and is the one that's used by OUCU. Your credit score can range from 300 on the lower spectrum all the way up to 850 in the excellent spectrum. Let's see. Next one is going to be credit history requirements. So most borrowers need a minimum of 3 credit references and a 2-year history. This is going to allow us to have enough credit information to assess the risk of lending. On our next slide, we are going to discuss why credit is important. So your loan approval odds are going to be based on what your score is, as well as what your down payment requirement is. So let's break it down. On a purchase price of $100,000, if you have a 660 score, our minimum down payment requirement is 5%. So let's say that your score is a 660. Your minimum down payment would be $5,000. However, if your credit score falls below that 660 mark, it could be that 20% would be required. So $20,000 would be your minimum down payment requirement based on this information. Just keep in mind that each and every application that comes through is handled on a case-by-case basis, so it's always something that we can discuss with you. This is just going to be for information's sake that we're sharing all of this with you. For debt-to-income ratio, this is also going to be a factor in your approval status. This is going to show all current debt payments compared with your monthly income, and this is used to determine your ability to pay what you're asking to borrow. For example, oh, I missed that one. used to measure an individual's ability to manage monthly payments and repay debt. So we don't want you to be overextending yourself, and we want to show the ability to repay. Calculating your debt to income ratio. So let's go into an example. So let's say your total debt payments, including any car payments, student loans, credit cards, and your new proposed monthly payment is $1,500. Let's say that you make $4,000 before taxes. And so in order for us to figure your debt to income ratio, we would divide your total debt by your gross income, and this is where we come up with 37.5% debt to income ratio. OUCU's maximum lending guidelines is 43%. So we generally cannot go over 43% for your debt to income ratio. On the next slide, we're going to show you what your housing payment breakdown is. So you're going to have principal and interest, which is your regular payment, any PMI or private mortgage insurance if you bring less than 20% down, also your homeowner's insurance and your real estate taxes. So one thing, OUCU does not escrow or collect for your homeowner's insurance and real estate taxes. These two items are going to be paid outside of your regular monthly payment to the credit union. As I mentioned earlier, we do require 1 full year of homeowner's insurance to be paid prior to closing. So after that first year, you can get on a monthly payment plan with your agent if that's something that they offer, or you can continue on an annual basis, whatever works best for you. And as far as your real estate taxes, you'll receive those bills in the mail, and you will be responsible for paying those. Something that we can do for you to help you save for these expenses throughout the year is we can set up a separate savings account for you and collect what the projected monthly amounts are and help you save for these expenses throughout the year. So just keep that in mind. Again, Kristen and I can talk to you about that as we go through your loan process. Okay, as far as your down payment, so this is going to show that you are invested in the property. This is going to show your personal investment. So the higher the down payment, the lower your monthly payment is going to be. It's also going to lower the overall cost of the interest paid throughout the loan process, or throughout the life of the loan is what I should say. This is going to be due at closing, and it is verified at application. So that is why we're going to be asking for your savings account statements or your asset statements wherever these funds are currently saved and available. Our current down payment requirements, so 5% is going to be our minimum, and this covers most buyers. We do offer a first-time home buyer program, a lower down payment amount of 3%, and gifted funds can be considered. Again, Kristen and I can go over those gifted funds if that's something that you're considering. For down payment, we do have to show ownership of funds. What that means is that these funds have been in an account in your name for at least 2 statement cycles. Possession is not enough for the regulators, so we are required to get more information and gather as much as we possibly can in order to verify these funds. Once again, that is why we ask for your asset statements. Okay, so since we have gone through the ownership of funds and the mortgage process itself, I'm going to hand it over to Kristen, and she is going to discuss private mortgage insurance.
Hello again, everyone. Before I do get started, I did just want to remind you guys, we do have a Q&A. Please feel free to use it. No question is silly. No question is dumb. It is our job to be the expert. We don't expect you to be the expert, so please let us know if we can help you navigate in any way, or please feel free to follow up with us after this webinar so we can answer any questions you guys have and get you pointed in the right direction. So we're going to get started with private mortgage insurance. So this kind of ties into what Shelby had just discussed with the down payment option. So private mortgage insurance exists because realistically, we realize not every borrower has 20% down. So this is our way of being able to lend to borrowers who have less than 20% down. What makes private mortgage insurance great is it allows us to say yes to more borrowers and yes to more loans. So when it comes to private mortgage insurance, it is something that you have to purchase. So there are a couple of requirements to the private mortgage insurance that we just like to make people aware of. There are general credit score requirements that Shelby had discussed earlier. Again, we'll look at this on a case-by-case basis. And we also consider the actual property itself for the private mortgage insurance. We do have to look at large acreage and situations like that on a case-by-case basis. But it is required on loans with 20% down. So it is required. If you don't have 20% down, you are going to have to get the private mortgage insurance, but it gives you that ability to get into the home with maybe a little less money saved to do so. The great news about it is we make it very easy to manage here at the credit union. So the payment is included with your regular monthly payment. So you're going to be paying your regular principal and interest payment, and then you're also going to have the PMI payment attached to that. So when you make your regular payment, it's all going to be included into one nice clean payment for you. So when it comes to the private mortgage insurance, we do like to let people know that it may be removed after 2 years. So it's possible to have it removed after 2 years or once your loan reaches that 78% loan to value. When we think of loan to value, what that means is it's essentially a comparison of what you essentially owe right now on that mortgage compared to what the value of the home was. All right, and now we're going to move into closing costs. So when you guys think about what you need to do to be prepared for the home buying process, a lot of that preparation comes into having the funds saved to proceed with the transaction. So the first part of those funds is what Shelby's already discussed with you, which is down payment. In addition to down payment, you'll need to be prepared to have closing costs to bring to the closing table as well. Now, closing costs, the way they essentially work, so closing costs is the cost of services needed to complete the transaction. So these are all of the fees that are needed for all the services provided that help you get to that closing table. Home buying is one of the most important and one of the largest transactions you're going to do in your life. So we want to make sure that it happens correctly, it happens legally, and it's a nice, smooth transaction for you. When it comes to closing costs, we like to break it into 3 different categories of understanding. So the first is going to be the loan. So there are certain fees associated with the loan, such as origination fee, appraisal fee. Those are all going to be included within the closing costs. So these are just services needed to get you the money to make the purchase. The next category we like to think of is legal. So this is actually the legality behind this transfer of ownership from your seller to you. And we, of course, want to make sure this is done correctly. This also includes the preparation of the deed. So this is where there's going to be an actual document that signs over that ownership to you. And finally, when it comes to closing costs, we think of the title fees. So this would include the title search. So once again, just making sure that the sellers legally own the property and can sell it, but it also facilitates the settlement of the transaction. So the transfer of those funds to make sure that everything is paid for and finalized at the end of this. Now, when it comes to total cost, we do like to let people know when it comes to closing costs in general. Unfortunately, this is not something that we can finance in with a loan. So what that means is it can't be included into your overall loan that you're paying back to the credit union. It does have to be paid at closing. So when you start to think about savings, you do want to make sure that you have that down payment saved, but also make sure you have some saved for closing costs as well. Now, when it comes to understanding closing costs, we do like to let people know there are a couple different factors that impact your closing cost amount. That's one of the first questions that we get asked in the mortgage process, and it's not one number fits all. So it's not X amount is the same amount everybody pays, because it does vary depending on a lot of different factors, including the loan type or product that you're currently in. It's also based on your credit score. I mean, a lot of different factors, like I said. So let's just say, hypothetically, it's going to be slightly different for maybe somebody who is working on, an adjustable rate helper loan mortgage as opposed to a conventional mortgage. All right, and that actually is going to transition us into our next category, which is going to be our loan type. So I'm going to make this a very general overview of the different products that we offer here. We are more than happy to have a one-on-one discussion with you to kind of see what best fits you and your situation. But I do just want to give you guys a quick overview so you guys have a general understanding of what types of things we offer here in terms of loan products for our mortgages. So the first option is going to be our conventional mortgage. When we think of conventional mortgage, this is what we hear most in the mortgage world. This is usually what people think of when they think of a mortgage. Most often when we get a call about a mortgage, the first thing they say is they want a 30-year fixed. That's the conventional mortgage. So it comes with a fixed rate, it's a fixed payment. We have various terms. So 30 year is the one we hear all about, but we offer other terms such as a 15-year or 20-year. So we can actually tailor that to fit you and fit your needs. Now, when it comes to the conventional mortgage, though it's one everybody's familiar with, it might not be the best option for you depending on what you're looking for. This particular product is typically best suited for long-term ownership. For us, we consider long-term ownership to at least be for at least 5 years of being in that property, we would consider that to be a long-term ownership where a conventional mortgage might make more sense for you. Now, the conventional mortgage comes with payment certainty. When you have that fixed rate and that fixed payment, you know exactly what your payment's going to be every month. And so it gives that stability and that security, which a lot of members really enjoy. Now, again, not everyone will benefit from a conventional. So that brings us to our next product, which is the adjustable rate mortgage. A lot of times, adjustable rate mortgage gets a very bad rap. People hear adjustable rate mortgage, and when I bring it up in some of my appointments, members get a little nervous on me, but it's honestly a fantastic product and it makes sense for a lot of members. So when we say adjustable rate mortgage, please know that there are rules behind that adjustable rate. So the rate changes based on an index and a margin. But with that being said, the products that we offer actually have so we offer what's called a 5-1 ARM. They have a 5-year fixed period in which that rate is fixed. And then every year thereafter, so that 1 in the 5-1 is the 1 year in which the rate can adjust, so it can adjust every year thereafter. Now we do have caps on how much that rate can adjust. So it cannot change. So the way it's essentially structured is it cannot increase more than 6% over the life of the loan, and it cannot adjust more than 2% each year. So we do have some guidelines that kind of restrict how much that adjustable rate mortgage can actually move on you. But again, that first 5 years, you're in a fixed rate. It's a fantastic product. What makes it great is for certain members, it may offer lower closing costs. It also works a little better sometimes if we have a member who might have, not as strong of credit, this product might make sense for them. It's also just a fantastic product for individuals who are likely to move in the short term, so more short to medium term. If you're only planning to be in the home for just a couple years, this product might make more sense for you just because those lower closing costs, it's going to allow you to get a little bit cheaper up front for a property you might not be in for an extended period of time. And our next product is actually construction loans. So construction loans are fantastic. We have a lot of interest in them right now. Being springtime, a lot of people are very interested in construction loans. So construction loans allow you to build your dream home. So a construction loan is exactly what it says. We have you'll have a contractor who will build the home and you will have that dream home. You guys get to organize together exactly what you want that home to look like, and we provide you with the funds to do so. Do you want to be completely upfront and honest? Unfortunately, we do not offer any self-builds at the credit union, so you will need to have a licensed contractor who leads up that construction. When it comes to the construction loan, it is on an adjustable rate mortgage. So that is something as well to know up front. But again, as we just learned, the adjustable rate mortgage has a bad rap, but it's a fantastic product. We do offer a 6-month build period. You make interest-only payments during that build period time. And so you're making the interest payments just on the amount that was used to complete that portion of the build. At the end of the build, that's when your loan essentially switches into that traditional repayment mortgage. We do offer a one-time close on our construction loans, which is also fantastic because it allows you to save on the closing costs and you move from the build process to repayment nice and seamlessly. And I will let you guys know when it comes to our construction loans, we typically do offer a webinar on those in the fall. So if you guys are interested in that, but maybe not quite yet, if you're interested in waiting until the fall, we probably will offer another webinar. But if you have questions in the meantime, please reach out to us. We're more than happy to discuss it with you. And finally, the last loan that we'd like to kind of discuss with everybody is our home loan payment relief program. It is what we call it the helper loan for short. It is a fantastic product as well. This product is really geared towards members who might have a little bit lower of an income. So this product is for members who their income falls at or below that 80% area median income. It's a fantastic program. It is on an adjustable rate, but it does have lower adjustment caps than our traditional adjustable rate mortgage. So the rate is actually a little bit lower, which is fantastic. And in terms of those adjustment caps, it can only adjust 1% annually and 5% over the life of the loan. This also does come with that potential 3% down payment option for first-time home buyers, which is fantastic. Again, these are just a very general overview of the products that we offer. We would be more than happy to talk to you about what makes most sense for you and your situation. If you guys just want to reach out to us, we're more than happy to kind of help you navigate this process. So now that we have covered a world of information, we kind of just wanted to talk to you guys about why choosing the credit union makes sense. Why would you want to have your loan with us? I absolutely love my job. I think we have a fantastic team here, and I think our service speaks for itself. And I think having that team here is absolutely why you should choose the credit union. But we also have a lot of other really cool benefits. For example, our application process is incredibly easy. We offer an online application that you can access 24/7. When it comes to the credit union, we service all of our loans. So we've all heard the horror story of somebody who purchased a home, thought they were with one lender, and maybe a year later they got a letter in the mail saying that they're now making their payment to a totally different lender. That's not going to happen with the credit union. I always tell my members when we do our appointments, you're kind of stuck with us. And I mean that in the best way. If you ever have questions about your loan, if you have questions about where to make the payment, if you have questions on paying it off, we are here to help you. You know who to call, you know who to come in to see. We also offer convenient payments through online banking. One of the greatest tools of having a mortgage with the credit union, if you primarily bank with us, you can easily get into online banking and see that account right there. You can monitor it, makes it nice and easy for you. And finally, we are the top mortgage lender in Athens County. People trust us, and I hope you guys will also do the same. Before we let you guys go today, I do want to talk to you a little bit about our online application. We do offer an online application through Mortgage Click. It's a fantastic program. It allows you to create an account. You guys can apply online 24/7. It allows for us to give you fast and quick loan decisions. You can view rates. We have mortgage calculators. It comes with educational tools, and we also have an online loan consultant, which is a fantastic tool that I refer to members nonstop. It allows you to see your payment on various different products. It's a fantastic tool. So after all of that, if you guys are ready to make the appointment and ready to make things happen, Shelby and I would be more than happy to meet with you. Feel free to give us a call. You can also book appointments online through our online booking system on the credit union's website. We'd be more than happy to have a chat with you to talk through options, or if you're ready to apply, we can also assist you with that as well. But if you guys are just in that place where you just have some general questions that you kind of want to walk through, something quick and easy, please feel free to reach out to our general mortgage line. So we do have mortgages@oucu.org, which is our general mortgage department email. And then that number that's listed below there is our team phone number. So if you call these, you're actually going to be able to reach any licensed member of our mortgage team. Aside from Shelby and I, we also have 2 processors in our department that are fantastic licensed mortgage professionals. They are fantastic point of contacts for you to have. And so by accessing these different, so that email address or that phone number, it allows you to reach essentially whichever one of us is next available, so we can make sure we get your questions answered nice and quickly for you. So in conclusion, thank you guys so much for taking the time to sit with us today and go through the mortgage loan process with us. We'd be more than happy to chat with you guys more in detail if you have any questions. We are going to stay on for probably, I'd say, another 10 to 15 minutes, unless we need to stay on longer to answer any questions that come through. So feel free to reach out to us. When you guys log off today, you guys are going to receive a very quick survey, very, very quick. It's just to give us an idea of how things went for you today, if you felt that this was informative, and help give us some feedback so we can make these even better for you guys next time around. Again, Thank you guys so much. Please let us know if you have any questions.